So in this one, yeah, I'm all good. Thanks for asking. Yeah, we can start with this if you're interested. But we are like rebuilding the Toyota because we're gonna travel on from next year, and we want to have a different setup and make it a little more nicer and fancier and better for the dogs. And this is what we did basically for the whole week because weather forecast said snow for today. We needed to finish like a big chunk of the work because then otherwise we couldn't use the car. And so we did that. And I'm not gonna lie, it's like, I mean, a lot of woodwork. We did a lot of wood interior and stuff like that. And this was my job back in the days. And I'm very glad that I don't have to do this every single day. Not that I don't like it. So the first 4 days were like nice to do something else, to be outside, work with wood again. But after this, and especially like we like having this deadline that we need to be finished before the snow, was kind of annoying, and I really start to disenjoy it, if this is a word again. But yeah, it's done. The biggest chunk, and now like the rest of the work is kind of fun. I hope, I guess. Hello, Andy. And so yeah, but a little bit away from the charge, which was also good to recharge my trading batteries, doing some woodwork. Now back to more charts, and I think a lot of interesting setups are shaping up. And so let's dive right into those because we talked about like live charting last time, and I think we're gonna do that today with stocks. I think it was also a request to do some stock charting, and I think today is the perfect day to do that. So let's start with the SPX because the SPX is pretty much like the overlaying or like the major asset we want to look at for stocks. And I think this is right now my base case. It seems like this wants to happen, will happen, whatever you want to call it. We're breaking all downsloping trends here. We make locally higher highs, and as I have shown before, this is usually what the SPX does. We start ranging, we have some, oh, sorry, screen. Here you go, guys. So again, SPX, I think this is the base case. This is not, I think, but this is my base case for now. We started ranging, we had some too aggressive sell-offs. Also, high risk stocks got completely violated via this. This is why I stepped aside. And now with those breaking trend lines and like with this strength locally, I think we're gonna go for those highs. And this could be very bullish 2 weeks or something for those high risk assets, because this is what the SPX usually does. We have aggressive sell-offs. Many people think it's over. We go for the highs again, sweep the highs, go a little bit sideways, and then with very low volatility here at the highs again, sweeping it, and then straight sell-off. And as said, for major tops, this is nothing unusual. We seem to do that around tops where we start ranging for the SPX just a little bit and selling off, not breaking structure really to the downside. But once it starts ranging, it's usually a sign for a broader sell-off. And then validation is clear, right? We could also be in something like this. We have those sell-offs, but then it just goes higher. And if it just goes higher, and for example, I take a short here, I simply take the stop loss and that's it. But right now, as said, I think we are seeing something like this. Could be the last leg. So from a cycle perspective and from many perspectives, it would make sense to do this. And then validation is clear. We either break this down and we go straight down, or we go to this and go higher. And if you go higher, I mean, as said, then validation is clear. I have this thesis right now. If it plays, that's great. If it doesn't play, I take some stop losses, or I'm simply just wrong. Not a big deal, but as said, this is my base case. And for this base case, I went into some alt stock charts. Many of them look exactly like this. So we retest the prior demand area, we break out of this downsloping trend here, and we may be up for a counter trend bounce, maybe to the 0.5, maybe to the 618. I mean, this is the best case target. Maybe we only go to here. But usually we don't go down in a straight line, and maybe that's the moment for some counter trend bounces. And I mean, a bounce here could already mean like 40% or something. So a lot of volatility on those plays. And you will see that if you go through this list, or if we go through this list, you will see that many more or less like have this setup right now. Here we are at the gap, retesting prior demand from the highs. Same story here, retesting prior all-time high, which is also an opposite pole here. We reacted already, and now we broke this downsloping trend. And as I said, there are many such cases, such as this one as well. And as said, best case target is for me to those highs, and I think a very likely bounce to the 0.5 will occur anyway, and then I can trade this already. And this is what I did today. So I entered many new positions, risking a lot of profits, adding those profits back. And I think it's either here, or if we break this down, as said, invalidation is clear, like in both directions. Either this plays or it goes down. And if it goes down, I take those stop losses. It's all calculated risk, nothing stupid here. And I think if it plays, the risk to reward will be very, very nice, and it's very favorable to play such ideas. As usual, I like those stocks because the risk to reward is great. The amount of time I need to put in for this is pretty little. And today we're gonna look at some examples of how to approach these stocks. And we talked about this before, but I think the request came last time. And I have some examples which we can look at, which we simply chart from the beginning. And you will see that what I do here, or what I look for these stocks, is pretty much, it's the same thing over and over and over again. First of all, supply and demand, premium discount, this kind of stuff, technical stuff, but also looking at the chart and seeing something you have seen before. And this is sometimes people come up and ask me like, oh yeah, do you want to buy this stock, or what do you think from this idea? Uh, Overall, as said, I can't know what happens next. This is why I manage my risk. But sometimes I like those ideas, but sometimes not. And the reason is simple, because sometimes I have seen this structure before, and it keeps on repeating itself because it's still stocks, right? It's a different company. You have like different narratives and all that, but in the end, it's buying and selling. And so structure will repeat itself. Like the chart is nothing else but a psychological print of human behavior, or a print of human behavior, which is in the end psychology of buying and selling. And so I look sometimes just for a chart which looks familiar for in a different narrative at a different stage, and then I got my play. And so let's start with the first one, which is a very unusual, unlikely, uncommon one. I'm gonna remove all of my drawings real quick. Why is group 1 already off? Oh my god. Okay, let's delete this. Let's put it into the group. Remove it. By the way, if you don't know this, groups are amazing. So, very unusual chart. Reminds me a little bit of a meme coin. And it came, like it launched here for $400 and it came all the way down to -3. No, joking, but very low. So if you're early adopter, I mean 10 cents or something, if you're an early adopter of this stock, yeah, bad times. Actually it launched here. It's over here. I mean, it's not really something, but yeah, still, like, it's still not a lot of fun to hold something from $60 to 10 cents. But this company was valued already at some point very, very high. And I'm not saying we're gonna go back to this level, but if we do, the RR is like amazing. I'm not playing those stocks on their own. As I said, everything is based on the SPX, on other majors, on the whole cycle kind of stuff. So back in April, it was a very good time to buy this stock. First of all, because we came down from this high, almost 80%. And so I said to myself, okay, this is looking not too bad. We are breaking this trend line. We are retesting it, and I entered in this area here. And it turned out to be a very nice trade. The idea was based on majors. The idea was based on the whole overall macro thesis. And the chart is at extreme discount. It retraced, already aggressive. And I did not expect that we go as violently to those highs again. But I at least expected a bounce, because every time we sold off aggressive like this on the stock, 84%, we bounced at least a few 100%. And so the risk to reward was kind of good anyway. And then you have the potential to trail something for way, way, way high targets, especially because the narrative is something that could be very hot in the distant, not so distant future, as quantum computing company. And so interesting stuff. What else do I look for on this on the stock? For example, here, volume, very simple. We have big increased volume. You can also see this on the structure of the chart. I mean, those candles look like shit. They look like the 1 second chart. So you really know that there was not much volume going on. As you see, like 2K stocks, here 29 stocks have been traded within a 1 week candle. So yeah, not the hottest thing here, but you see volume increases dramatically into this in 2024. And then we talk about 790 million peak here, and then consistently good volume, something you then want to trade. Not that sexy down here. Volume increased here already a lot. We're talking about 4 or 5 million. And then it spiked rapidly. So I think this still has a great future. And I always try to get my foot into the door with after retracements like this. If I get my signs, if everything lines up a little bit, if the stars align a little bit, or even a little bit more. And in this case, pretty simple stuff. Here's a gap. It's also around the $10 psychological level. We lost that. So a lot of investors, which are not looking at the chart, they're going to say, oh no, my God, we lost $10. And then we broke this trend line here. We retested the gap again. And so I think right now it's looking good for a bounce. And as said, I'm not targeting, and I'm never targeting something crazy. So my best case target always is a structural high. So this would be this. So this is like our big supply. And as long as we not exceed this, this is the maximum target. But my first target will always be the 0.5, because price and algos are made, or they're pushing price back to the 0.5. Why? Because after an aggressive sell-off like this, and we bounce back to the 0.5. Why? Because a lot of people are going to sell this, and then a bounce back, and I mean, we talk about like 50%, 60%, this will attract a lot of new buyers again. And this is what they want, right? They don't want to dump price down, 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 because every time like price goes lower and they sell for a lower price. And so they want to have buyers again at some point so they can sell more for a higher price. In the end, it's always the same, attracting buyers, attracting sellers. And we also have the supply here. And so to me, it makes sense to take this risk for a counter trend bounce, and the risk to reward is not that bad. I did not enter at the gap because I always wait for confirmation. I could have entered here, but I waited for the SPX to give me even more confirmation. And then I target, for example, this as 3R, and if like stars align, it might be a 7-hour trade in the end with TPs, and then I have a moonbag left. Should we break out from here? Should we go for way higher targets? I'm exposed, but I do not hope for this. I'm just like trading the structure, and this is the most likely, or this is the best case target until proven otherwise. So the SPX and Nasdaq are majors for stocks, or is there something else? So you consider gaps by itself, not exactly with OB before it. No, those gaps, they are very reactive on their own. If you wanna like get confident in trading such plays, do backtesting. I did a lot of backtesting on gaps, lower time frame and higher time frame, and they have a very good win rate on their own. And then obviously like premium discount, this kind of stuff, placing the stop loss right. And if you then have some execution tactics, it's a very nice edge to trade in my view. Do you draw trend lines wick to wick or close to close? Also, is it actually that you just take a broad trend line? I basically take a broad one. So you will see a lot of trend lines not really fitting like here. I could also make it, I don't like the look of it, but in the end, to me, it's a general area and nothing like, nothing like on the dot precise. But it's a little bit an intuitive thing. So we will do several stocks today, and you will see that how I draw them. And here in this case, it's from this wick and to this body. And then I also simply consider this as well. This is also breaking out. Many ways to look at it. Also, you can connect these highs, but I don't think this is a very interesting one for now. This could be for potential target here. Gonna be an important one. But as said, it's not rocket science. Just draw them, connecting. I like to connect as most. I like to have as many touching points as possible. Let's frame it like that. And another like big rule of thumb and a very nice and good one in my view is the trend lines. So first of all, you have the first high. You cannot pull a trend line without a second one. The second one occurs here. So you can, in this case, you can pull the steep one. Doesn't make as much sense in my view, especially because, yeah, it's a very obvious demand zone, and also SPX was not aligning. But here you have your second high. And then you see it gets rejected more or less again here, a little bit at least. I mean, it's very, very strong sell-off anyway. But we have better examples for that. And then usually we have 1, 2, 3 touches, and the fourth one doesn't work anymore. Why? Because everybody sees it after the third one. Because then the trend line becomes obvious. And if something becomes obvious, it gets less likely. It works less likely. Simple as that. And so, yeah, 1, 2. The third one is to be observed. If it breaks out, or if this is the third one, if it works, we usually have a fourth one that fails, and then we break out, and then we have some kind of retest. You stop below the lows, below the level that you want to trade, and yeah, that's it. Very simple stuff, nothing overcomplicated. But as said, we have several examples for that. And again, majors, SPX and NASDAQ. I look mainly at the SPX, but I also have an eye on NASDAQ, and I did a lot of like going back in the historic like timeline or on historic charts on the SPX. So I have a pretty good understanding of the SPX. I have not as good of an understanding of the NASDAQ. So for example, the thing I've shown you here, like this kind of thing, if you looked at the two previous major tops we have formed so much, and that's also something we have this, so 1 time, 2 times, maybe we get something like this a third time. And by the time this happens and we have this strong sell-off, the next time many people are going to aware of this kind of pattern, and then it will maybe change. So all good things are 3, right? So we'll see if this is playing here as well. And if I look at the NASDAQ, for example, it does something different. So we have a similar kind of top here. So with the last sweep, going a little bit sideways, selling off aggressively, never looking back. But we did not do this here. So this was more or less just a double top, not even. Yeah, on the daily it's a double top. And we did not sweep those highs. And there are differences. But in general, it also started ranging. It went higher again, and then it started selling off. I think the SPX is a little bit cleaner for such signals. But as said, I have also, for me, might maybe a little bit cleaner because I have a lot more data collected, and I look a lot more on this chart. And so I get my main thing from here. I also take some macro stuff into account, like looking at risk in general, like look at the whole, not just the stock market, but also how is crypto behaving. Because even though crypto and stocks are a different market, they're somewhat connected because people that trade crypto maybe even look at stocks like I do and stuff like that. So you have a group that's pretty much like, what's the word? You have the same group of people looking at it. And this makes it like connected in some way. And while like with like, I mean, The SPX corrected 5%, which is a lot for this indice. Crypto and especially altcoins corrected 50% or more, and even those corrected very aggressively. And so they are connected, but also this kind of move, if this is occurring, we maybe just go down 2%, they can rip way higher. And they're connected because the same people look at it, the similar people trading it, maybe even similar institutions. And obviously also within this, in this basket of stocks, some of them, I mean, not those, probably, they're included as well. And this is, you need to understand that the SPX is nothing but a fund, and it gets like managed by a group of people, and they add or reduce exposure of certain stocks. And the SPX 500 is basically made out of the biggest US companies. Like, I think they make, I don't want to tell you numbers because I'm not quite sure, but Apple, Nvidia, Google, and all of those, they make, I think it was 40% or something of the SPX already. And so there are people who decide which stocks come into this basket, and they manage them for you. Pretty much, you giving like control away, and let people decide what you want to have in your portfolio. And I mean, obviously, they're doing kind of good job, because a lot of people also buying into those funds. But long story short, make sure you understand the underlying assets. Make sure you collect some data if you want to use them. It's the same like with USDT and all those kind of things. Do some studying, like look at those, compare it, look at historic patterns, all those things, because then you will have more clarity, and confidence comes from competence, right? So back to those. As said, it's a pumpy dumpy kind of thing, more meme coin like. But anyway, tradable. Then we have a different kind of pattern. So let's take Rigetti, for example. It's a newer company, but usually what happens when a company launches, it has some kind of initial run. Everybody's happy, everybody likes the company, and then something like this occurs. So I mean, it's not like something rare. So if you look at stocks, many stocks have something like that. And then suddenly, when nobody's interested in it anymore, it suddenly starts to rip, and it rips kind of aggressive, and we completely violate this high. We go higher, and looking at charts like this makes charts like QBT even a little more appealing, because if you remember the structure of this chart, even though the sell-off was even more aggressive, it could be something similar in the future, right? And we have another one looking like this. I mean, Rigetti, extreme example, and it played out kind of well. I entered somewhere in this area. There was some kind of level. Entered here, TP'd at the all-time high, trailed the rest. And now it came back over 50%. And it's retesting the prior all-time high, the prior range high, and yeah, breaking out of this trend line. Said, thinking this is looking good. And if I go for Loy, you will see again, similar behavior. Oops. What is all this? Go away. Initial dump in this case, then pump, and then from 6K we dropped all the way down to whatever, zero, almost 99.9%. And then suddenly volume spikes at the lows, volume spikes into the rally here, and we talk about thousands of percent here. It's a very, very crazy chart. And we have this initial run, already 4,000%. And I mean, if you bought down there, these are generational entries for some of those stocks. And I started trading it here. I bought a good chunk here, and I TP'd into this pump. I TP'd actually here, re-added some here, TP'd into this pump. And I'm doing pretty much the same thing, right? I TP'd here, 90% actually of the position, and I just re-adding some of those profits here. And again, similar chart, kind of pumpy dumpy, goes like crazy up and goes crazy down. And now it's back at demand, it's breaking out of the trend line, majors aligned somewhat. So I think sexy idea. And you see these three charts have all something in common. They're all kind of violent, and while Rigetti is the only one that really made new all-time highs, it's still pretty much like not the same, but similar. And this is what I mean. By looking at many different assets and getting like a lot of experience, you will look at a chart and you say like, ah, this reminds me of this reminds me of that. And sometimes I enter trades simply because I see the same thing playing out that I have seen before. And it played, for example, perfectly. And we can, for this example, we can, and it's a very broad topic, I know, I hope it's not too much at once, and I hope it all makes sense what I'm telling you guys here. Because we have another good example. I mean, this is just going higher, getting adopted quite aggressively. And we have Oklo doing here, it was actually time frame, yeah. Oklo doing a 24% correction, and the ones that are longer with me, they already know this play because I talked about it before. We had the sell-off, we went back, and this was more or less a mid-time frame idea, maybe even a low time frame idea. And we went back to this demand. We had this big absorption wick and it was going sideways. And I thought like, okay, we have this breakout here. Or we have, no, it was actually, I was entering here. We have this breakout here. Let's give it a try. I entered local invalidation below the stop loss and then it started ripping again. And I exited on the trendline break on the way down. And this kind of structure, and it was like, for me, a first. So I traded this kind of structure for the first time. This is not a strong demand, and this was not like on a huge size because this was more or less a momentum entry after a 25% pullback. And I entered at this demand because I saw this big absorption wick, the breakout, and then I simply entered. And then I was introduced to a new stock. It's called Credo. They're making chips and stuff like that, if I'm correct. Luckily, I'm writing all of this stuff down because otherwise I couldn't remember. And it was reminding me, let me just find it. Yeah, like this. The structure, like if you simply compare like candles, it looks different. But is this the pullback I'm talking about? I think it is. I think it is. Oh, it's already a while ago. And we corrected anyway. We corrected 27%, and it was doing this, going sideways. This mini demand here, nothing spectacular. And then it started breaking out of here, retesting this area. And I remember, I think I was going along here. I mean, it's in the Discord, you can check it out. I have traded so many stocks this year. But it was simply same story. It was going like crazy. A lot of people got attention to it. Then it corrected like crazy. And then I entered on this pullback on the trendline break, exited here with 90% or something. It dropped down, went back to this demand, ripped like crazy. I sold the rest yesterday at this wick up here. And I'm glad that I'm out. This looks like a higher time frame 3 drive. Big absorption at the highs, big absorption volume here. I mean, look at this candle here. So volume spread analysis, we talked about this as well. Big volume, big wick at the top, small body, big absorption here. And as I said, like simply looking at the candles, it looks different, but it reminded me so much. And so I simply entered here, accepted the risk, put my stop loss below the low, and that's it. And this was solely based on an experience. I can't even tell you what I like exactly saw here. For me, this was just demand. We had here some high volume and we had a crazy rip from here. So there was strong buying interest. We came back to this area. It reminded me of Oklo. I entered, it ripped, I made profit. That's it. 3 drive short idea. Yeah. I don't really like shorting those, especially like my main thesis is this. So it's not the best idea to short against my main bias right now. And I have some shorts running, I have some hedges running, but it could work, obviously. I'm not want to say it's a bad idea or something. I mean, up here, this would have been a nice entry. I mean, here it's already like, where would you put your stop loss? um, Maybe if you retest those highs, something like that. Not interested too much, though. Yeah, and you see, solely based on experience. It's also very hard to teach somebody like something like this because I've just seen this on the chart, and it's very hard to make like a rule out of it because you can't teach intuition. You can't really teach experience. It's something you need to acquire yourself, and those are like these kind of charts. Then we have another kind of chart I really like. It's your, let's remove a little bit of this clutter stuff. It's your like chart strong since the launch, went into this crazy parabolic spike, usually around 21, selling off aggressive, and you will see many of those charts, like many. Selling off aggressive, coming back to the major demand, and for this I usually also like no, the volume profile to see where the most volume was traded over the time, ever since like this chart and this stock exists. Where was the most volume traded? And it was no real surprise traded like where the most price action was. And we are at this area, which is an important inflection area. And this is not like don't look at the point of control and say like this is like the perfect entry. You put your stop loss below and that's it, because this is how many people approach it. And I don't really trade the point of control. I add it as confluence to see where institutions, whales, put in the most amount of money, traded the stock the most, accumulate the stock the most, because they are most likely going to defend this price area. Not that like we need to reverse from here, but it's definitely adding confluence, because whales or institutions or big traders want to defend this. And it's a nice area for accumulation with those big traders. And same, so like on a higher time frame, I would simply connect those highs for a big sell-off. And you see, it's not always the perfect thing. I mean, we bounced quite aggressive from here, but then we also went lower, we went sideways, and you don't want to lock in your money for like 4 years or something, or 3 years. So at some point, it might be wise to let go or to simply trade the structure. It goes down, you buy, it goes a bit up, you sell, it goes down, you buy, it goes a bit up, you sell. And I mean, we talk about a time range of almost like half a year. And that's why I always trade the range, even though maybe this is likely. If I zoom in, and if I, for example, entered on this here, my first area of interest would be this, right? This big supply. And this is where I would TP big, and if then the trend breaks down, and this is what you see all the time, what I'm doing, the trend turns against me, I'm out, and then I can decide to go back in once like favor shifts, um, structure shifts in my favor. And it's doing this right now. We had this double top. I exited like a lot of the position here on this trend line break. You can see this all in the Discord. It broke this here. I exited a huge chunk of the position. I add back now at this demand. Look how precise I draw it. We went even a little bit lower, which is also taking liquidity. Now, the most important thing, we break the trend line. I enter here, I target these highs. If we go higher, that's great. But I'm gonna TP here at the 0.5 and at those highs. As I said, it's simple stuff, and you by now you probably see it's the same thing over and over and over again. It's not rocket science. It's looking at supply, looking at demand, looking at higher time frame structure, making a higher time frame thesis, entering on a trend line break. It's as simple as that. And pump and dump kind of thing. We have, for example, prime example. It looks simple, honestly. Yeah, and it to be honest, it really is. I don't want to like build myself up here to be the great genius or anything. It's really it's so fucking simple, really. The major thing you need to learn is emotional control, right? And it doesn't really matter which kind of strategy you trade. It could be the most complex strategy, could be the most simple strategy. If you're not able to hold your trade for long enough, if you cut too early, if you're not disciplined to take profits, the best strategy won't save you. It's as simple as that. And this is something you only acquire through like experience. But the edge I'm showing you here, the thing I'm a little bit creating myself, and I mean, I refine it obviously, but I don't see a reason to add a lot more of knowledge. It's simply like executing at the right time. And it made me like 60% in 3 months. I paid back 10%, but I mean, look at those stocks. Some of them corrected 60%. And yeah, obviously from my all-time high, like from when everything ripped and then I sold on breakdowns, obviously I pay a little bit back. But I mean, you made 60% in 3 months, paid back 10%, entering new positions now. Obviously, if they get stopped, I pay a bit more back of those profits. Time will tell, but like if I if I would tell you how much time this takes me and how much like gains I make with this, you would think it's ridiculous. And the funny thing is, people look for complexity, compensation through complexity. They think like if it's sounding smart, if it's highly complex, if you need to like have 1,000 different layers of something and need to like put in 1,000,000 hours to really get it, then it sounds like the right thing. But in reality, it can be a lot easier in my view. But everybody has its own path to go, obviously. Yeah, same story. You see accumulation ever since the beginning. The company is, by the way, way older. It's a hydrogen company. It ripped crazy into 2021. It sold off crazy into 2022 and even into 2023 and 4 and 5. So this one simply broke down and down and down. But also here we connect those highs, 1, 2, 3, and now what happened? We broke. Now we're going sideways. We're accumulating here in my view. So I'm accumulating with the whales. And if we break down, my invalidation is clear. I tightened the stop loss, by the way, a little bit. I had it a little bit lower, but I mean, look, it's already 30%. It's a very volatile thing here. And if we go back to the 0.5 of this swing only, it's already a 10-hour trade. And if it goes higher, which I don't expect, to be honest, I think this area is going to be like very tough. And especially like here, 0.5, big supply. I think this area is going to be very tough to reclaim. But if you go to this area, I mean, very nice trade. Very simple. Doesn't take a lot of time, only takes emotional control. And obviously a good broker, because you can trade those on every broker. Yeah, but these are the pump and dump. I can also, the 21 pump and dumps, let's call them like that. We can also look at PayPal. Similar thing, looks a bit different. So you will also see some looking like this, a more aggressive sell-off. And to be honest, I like PayPal, like from a fundamental perspective, but this is not why I'm entering this play. I like it because I like the structure. And the question now is, are we at the lows? So this is just, I'm not in this trade, so forget that. I want to be in this trade. So if here it's hard to pull a trend line, right? So if you look at this, I mean, if I pull the trend line like this, it was very likely that we're going to break this at some point. The steeper it is, obviously the faster it breaks and the less it means, in my view. So I pull a local trend line like this, or I could also like do this. And according to this, we broke already out. But I think this is like, it doesn't make sense to me, to be honest. That's why I look at this locally here. And so far, the trend line is providing good reactions. And we have a third one. We have big absorption at the highs. This doesn't scream strength. And to be honest, if we, for example, enter a bear market on the SPX, I think this is not so unlikely, to be honest. So I have now two options. I enter once this trend breaks, and I target first these highs. And I mean, once we like clear this area here, we probably teleport up here. And as I said, I like PayPal from a fundamental perspective. I used it a lot in Germany. I don't use it as much here. It's not as common, but it's a great service. And I mean, there is a lot of bad news or like bad fundamental news around PayPal, that they lock people's money and all that kind of stuff. But banks do this as well. From a like technical perspective, I like PayPal, and I think it's going to be has a big use case still in the future. They work on stablecoin and stuff like that. But I would not like simply enter based on this. I think it looks very weak, especially with those wicks, and it might go down here. And if it does, I can simply wait for a trendline break. I enter maybe with SPX confluence, and then the recovery could be biblical. And you see similar story. looks different, but it's pretty much the same. Pump into 21, aggressive sell-off until now. Pretty much similar chart to nail, like the hydrogen chart from one before. And then we can also pull this and oh, look at where we are. We are at the point of control, but very important here. Here, down here is a lot of volume, lot of volume. And so if you enter bear market, and if this is not showing strength, soon we're gonna probably fall down here, and I will be waiting to accumulate paper. In stocks, is there something like leverage? Yes, there is. You can buy CFDs if your broker allows that. And there are lots of different regulations around CFDs. Most countries don't even regulate them really. And then it depends on your country. It's up to 10x leverage. I think I got 10x here. And also I have on Interactive Brokers, I have a margin account which allows me 2x my base margin, which the things the margin I deposit, and then with that and CFDs, I pretty much have a 20x leverage on my account if I want to. But some of them are so volatile. So for example, on nail, I have a 30% stop loss. So a 10x leverage instrument is probably not the best idea. So what else do we got? So we have the pump and dump. We have the kind of half pipe kind of thing like Rigetti and Loy. Yeah, and then we have also different structure, confusing. If you're used to this kind of we need to buy and discount stuff, because if you wait on this chart for discount, you might wait long. I mean, even on COVID, oh no, it's not even COVID. I mean, this is the financial crisis, right? I mean, even on COVID, we sold off aggressive 40%. But look at this. If I pull my fib from the financial crisis low, we not even reach the 0.5. And then if you wait for discount, you will never get your entry on the stock, for example. And this is simply because this is a different stock. It's a different kind of instrument because it's still a stock, it's still a company, but they pay dividends. And if they pay dividends, they move differently. And you will see a lot of those stocks paying dividends that will look different. So for example, if you go for Allianz, it's a German insurance. It behaved like a normal stock, pump and dump a little bit, but ever since here, it pretty much simply goes up. If you look at McDonald's, if we could look at McDonald's, I think my Mac is slowly exploding. At least it gets very loud. Also here, like on COVID, if you wait for a discount, if you pull this high time frame, oh, actually here was discount. Didn't know that. So not good to make my point here. But look at the structure. It also moves kind of different. It has very long history already. If we put it in log, it looks a little bit like BTC. Yeah, but it went back to 0.5. So this is not making my point. Anyway, if you look at this chart, you might think, oh yeah, wait for a bigger pullback somewhere like in this demand, but it never comes. Why? Because it's paying dividends. And if it's paying dividends, it moves a little bit like an indice. People just putting money in, they're DCAing into this, they get dividends each quarter, and they use those dividends to reinvest in the stock usually. This is like how dividend payers, dividend traders or investors think. So I learned, for example, my first experience in the market and the first knowledge I got was from my father-in-law, which is a dividend investor pretty much, and he was always recommending you buy insurances, you buy this, you buy that, because they pay you a dividend. And he said you just reinvest the dividend and you make so much money. And I didn't believe him in the beginning. I was like, no, I need to have high percentage gains, but I bought some. And actually, it was very comfortable because you have nice positions. They pay you some dividends. You reinvest them maybe into other places as well. Take profits at the right time. And it's a very, very easy way to make money. Obviously, with a small portfolio, not that easy. But This is why some stocks behave differently. And this is very important because you have different, it's a stock, but it's a different asset class a little bit because it's paying dividends. And so this is something you should know. Like what players are playing the play. So for example, we know that altcoins move very different, for example, to BTC. BTC moves very different to the SPX. And so you have the same thing in stocks. You have those aggressive risk on stocks, pumping, dumping, and you have those sustainable growth stocks, dividend payers. Which plugin did you choose to show volume profile? It's here in my favorite bar. It's fixed range volume profile, and I think it's in the fourth here. Projection, volume based. You have the VWAP and you have the fixed range volume profile, and then you simply drag it over the thing you want to see. And here I don't use it because I knew this is not going to provide me anything, because if I wait for the point of control here at 14 cents, I will probably never get an entry. So knowing when to use a tool, so we maybe want to look at the VWAP here, maybe provide something better. Not really. I mean, maybe if McDonald's, I don't know, if McDonald's, whatever happens to McDonald's that this occurs, I mean, this might be a nice entry, but I wouldn't bet on this. I wouldn't bet on this. So, for example, if I want to understand an asset, I simply look at the history, right? I simply look at this chart and I say, okay, when had McDonald's corrections? I mean, this is a large correction. It's in 99, it's probably dot-com bubble stuff. A lot of people probably invested. And ever since it went up only. And when it corrected, it was like 20% here, 20% here, 16% here, 15% here. I mean, COVID, yeah, 40%. But so the average correction for this is probably like 15 to 20%. And every time it corrects 50 to 20%, it's basically a good entry for this. I'm not saying you should buy McDonald's if it corrects 20%, because obviously it still could go down here. Everything can happen. But I don't force anything. So we talked about those aggressive stock, pump and dump stocks. If I would want to trade this, I would not wait for a 50% correction. I obviously I know this could happen, but if you, for example, correct from here 15 to 20% into this demand, it might be a nice entry for McDonald's, for example, if the SPX aligns and stuff like that. And then you have a nice dividend payer going maybe to the highs, 25%, paying you dividends, stuff like that. There are many ways to make money in the market. You don't only need to buy shitcoins or trade leverage. There are many ways to make money in this market. And I mean, yeah, we could talk about like how bad McDonald's is and stuff like that. But the question is, I mean, I have my own border of not investing into like war companies like ThyssenKrupp and companies like that, because I don't really want to support this. But I mean, McDonald's is still a choice. They're not invading any countries. They're not forcing people to eat cheeseburgers. So yeah, I think I can morally like accept that. But as said, if somebody's building weapons, war machines, invading countries pretty much to make profits, I don't really want to give them my money. And then besides McDonald's, you will have a uh, lots of insurances and stuff. And the funny thing is, like if you bought this like after the financial crisis, it's a 500% gain, and it's paying you dividends on top. You get like you get cash every year, every quarter basically, and it's still going up 500%. I mean, yeah, it took like 15 years, right? But if you have a broad time horizon and if you understand the market, you don't only need to buy the SPX. There are so many ways to make money in this market. You just need to be a little creative, a little bit flexible, and yeah, as said, and this is not a single insurance that is, or a dividend payer that looks like that. Many look like that. Many have insane and great performances while paying dividends for decades already. So don't forget stuff like that. Yeah, so pump and dump, we talked about this. Then we have those kind of things. It is pretty much also similar pump and dump, or this kind of half pipe thingy where it launched, it completely sold off, got hammered like crazy. And what I like here is the increase in volume down here and the potential to go to those highs. I only have a Moonbag left right now, I think. But same story, it accumulated. It's hard to pull a trend line. It's a little bit like PayPal. Where would you pull it? Maybe those connecting those two highs. But it's a very low cap, speculative kind of thing, and you should also consider this with size. These are a little bit more creative, difficult to judge. Um, I mainly like the narrative psychedelic pharma because I believe in psychedelics myself because I experienced a lot of healing of them myself, and I think it's a good thing that they experiment with stuff like that. I'm not saying this company is good or any of these companies is good. I don't really look too much into fundamentals. I like what they are like doing and the studies they are doing. And from a chart perspective, as I said, they're very speculative, very hard to read, very hard to trade. Um, so also different category here. Mhm. Yeah, Toyota, dividend payer, looks a bit different than those insurances. Would also consider it a global player, doing well ever since ever, pretty much. No wonder, looking at my car. Yeah, also nothing spectacular, but if you have a broad time horizon, very nice thing, paying dividends. And you see those usually, if they really provide anything, really provide value, not completely speculative, like established global players, they will look somewhat like that. And in the end, let's be honest, why we aren't doctors either in safe life. We just want money out of thin air. Yeah, it's pretty much like that. As I said, I have a little bit of moral with stuff like war, but other than that, these are companies, right? They're producing, and to be honest, which companies are really producing anything like of value? As said, I like my car, so probably Toyotas, but they all have some kind of dark spots. It doesn't really matter what you look at. They probably also built tanks in the Second World War or whatever. I don't know. Um, it's always like if it's business, there's always dark spots and always things that are morally not really acceptable in some way. Yeah, pump and dump, aggressive pump and dump here. Yeah, I think I pretty much covered it. I have another like one more thing. Established player, very established player, very nice company. Also kind of strong ever since the financial crisis, and it gapped down like crazy. So we had this one day we gapped down 30%. And I took a short-term trade. I full TP'd here at the 0.5, and I took a long-term position because I like this company from a fundamental perspective. I did not add, but I could. Simple trendline stuff, 1, 2, 3 in this case worked not, or here's the third one actually. So fourth one didn't work. Are we going higher? It wouldn't enter here. But the idea is, first of all, liking the company from a fundamental perspective, and after a 30% sell-off of a global established player, it's nice to get the foot into the door, especially like with a clean validation. And the idea is filling the gap, and filling the gap is already a great performance. And also based on demand, based on supply, based on a little bit of fundamentals, and that's it. That's pretty much it. As said, no rocket science. And yeah, and then you have those new company. I reduced some size here as well. You can see this in the Discord. Very new company, um, cattle, a Chinese company, and it's listed. It was listed this year. It's going up ever since. Nothing spectacular for now, and wanted to get the foot into the door. Scaled at this small demand here. Started scaling on this retest here. TP'd on the way up. TP'd on the breakdowns, and I would probably add back at the demand because I like the company. And yeah, not much history, so you can't really, it's also some kind of like unknown territory. What should you do? But remember, how many companies have we seen that launched, pumped for a short while, and then dumped like 80%? Don't really, it doesn't really matter how good the fundamentals are. A stock listing is always only to make money for the company. It's fundraising on steroids, And the best way is to pump it a little bit, attract a lot of investors, and then dump into their face. And yeah, don't want to be a bag holder, no matter how good the fundamentals are. Yeah, so some stock charting today. I hope it was helpful. We have 30 minutes. We could do some more charting. I could do some charting. We could also um, do some, like, take some of you guys on the stage charting. I'm doing some more or less charting market structure exercise, whatever you want to call it. Or you just ask questions or whatever. Bring something up. It's on you. Monitor edge, like hidden order blocks, are not relevant for stocks, right? They work sometimes, especially like the very high time frame ones. But also, I've made better experiences with simple supply and demand and trend lines, to be honest. Um, yeah. Ah, yeah. Nice little execution kind of thing. I fucked the ADO trade a little bit up, but that's okay. Rather managing the risk too early than too late. And AVAX was lagging a little bit behind. I got stopped at break even because I was very defensive with my positions. Like I'm always a little more defensive in crypto. Don't know why that is. Maybe because it's not my edge. Maybe because I carry some emotional baggage. But anyway, AVAX was lagging a little bit behind, and I saw the strength of ETH and BTC, and so I simply added back to AVAX because it's on the level, and not close below it, did not break structure. ETH and BTC look like they want to go higher. And so I just entered AVAX again because it was lagging behind a little bit. And that brings me to one big conclusion. People always love to take altcoin trades. I don't know why that is. Maybe it's just emotional, a connection, because they think like, oh, altcoins are so volatile, I make more money. But guys, in the end, it's about RR. And if the altcoin is not providing anything more than majors, it's just more difficult because they are more erratic, they are more manipulated. I mean, look at these wicks. I mean, I have not seen a single market, not a single stock. Yeah, sometimes, but some stocks, but they're very crappy low cap. But across the board, all altcoins printed something like that. This is the most manipulated market. I bet half of the volume is not even real. It's wash trading. It's like not regulated. They can do whatever they want. So structurally speaking, it's so hard, much harder to read all of that and to make proper conclusions. And if the altcoin trade is not providing anything like significance of value, which is more R, on entering on confirmation because it's lagging behind, or something like that, it's not worth like the energy. Because if it's not providing anything more, if it's not leading to better results, it's just more difficult. It's just more difficult. And yeah, people love altcoin trades. I don't know why that is. If I share altcoin trades, I get a lot more engagement than if I share a major trade. And I think it's just based on emotions, not on logic. I have a question regarding Toyota. There is a trend line that was tap fixed 7 times. Is that obvious? Should break the trend of line of break of that trend. Let's look at Toyota. Let's go for the Japanese one. You see also, nice little tip for stocks. I have a lot of, these are numbers, and it's for the Japanese stock exchange because it was listed there first, and so you have more history. Why am I talking shit here? No. And it's in Japanese yen, so price will look a little bit different, but you get more history. And always be aware of where more volume was traded. And so I base my analysis then on the chart which has more volume and has more history. And for example, I wouldn't trust this trend line too much anymore. And if we break this, we probably go down to this one, which is then aligning with demand. Oops. At some point here and right above at the 705 probably. So, and you will see that the one that listed at the New York Stock Exchange will probably look a bit different. Yeah, it does. And yeah, it's the trend line is working quite good for now, but I wouldn't trust it too much. So maybe if we go back to here with and we have alignment with this demand, then yeah. But I probably I could see something like sweeping the trend line going for this. And if we even lose this, we probably go for something way lower. And yeah, the more obvious it becomes, the less strong it gets. Where can one backtest stock apart from TradingView? TradingView, I think TradeSeller has also lots of stocks. Probably not the smaller ones. I'm not quite sure. Not stage for me today. I'm kind of done mentally. But if you could go a little bit deeper in the way you see strong versus weaker demand zones, you said you refine when price gets into a level. Do you refine contextually on the immediate levels, and how would you do it? Also, what if demand zones are kind of very near to each other? Basically, you just use them like in auto bugs. First one doesn't work, show strength, try the one below. If it doesn't work either, take the one lower, etc. So for the second question, it depends on how far they are apart. I mean, if it's reasonable to include both into one trade and say like I scale into this trade should the low one hit, I do it like that. If it's not reasonable, if they, for example, are like 30% away from each other, but they are structurally speaking still close because the chart is volatile, I maybe trade them differently. But the thing is, I don't even need to know that before, but because one of them will hit. So for example, take QBT here. And I expected the demand lower to be hit. So let's go to current PA. So I expected first to, let's put on my stuff again. Oh my God, go away. So I said, okay, I want to enter here. But now looking at this gap and the retest of this demand here, the question is, like, I can't really, like, it's not reasonable to include all of this. But I got my clean validation with this trendline break. And now I say, okay, if this is like not holding, if these lows get swept again, it's probably the lower demand. And then I can do the same thing all over again. And so I don't need to know before. My edge says, okay, enter here because of the break, I accepting the risk and putting my stop below this. That's it. The leaper where you see stronger, weaker demand. So stronger, weaker also implies you want to know before which is the strongest. And there is a very, very simple kind of thing. The stronger the impulse was from the demand, the stronger the demand gets. So for example, if we like say this whole thing here, so this was demand here already, even though this chart looks horrible, right? And look at this, boom, moonshot from this area, moonshot. We come back, touch again, we front run it, and then we come back here again. So, and again, moonshot. I mean, we talk thousands of percent now on high volume even. So if we ever come back to this, I would consider this a very strong demand. Simply, I mean, this is a very obvious one by now, but from a technical perspective, simply because the move that resulted after this consolidation was so biblical. And same story on pretty much all demands. So this demand, if you look at this as whole area or the smaller one as refinement down here, we have a very strong impulsive move compared to this one down here, even though, okay, bad example. Let's take this one here. No, also bad example. This one here, way higher up, smaller consolidation, strong move. And it also gave a reaction, but it's way weaker because of several reasons. It's higher in premium. It's not at the bottom of this move, which is pretty much here. So we have the real bottom was here, right? But here it became vertical. Here, like the real imbalanced move started. And so this area, this long consolidation, is strong demand. This is also strong because it was the first demand we created, like for this whole move. But this created the most significant move up. And same on the way down. Like this also is kinda supply, because we have some consolidation going down, but we also retested it here. And this consolidation here, we have a very strong sell-off into this. 35% in just a few days, very strong supply. But obviously not as strong as up here because it's at the range high, higher in premium, all this and that. So you see many variables. But the thing is, I don't really need to know all of that because I simply execute here and I'm playing pretty much all of them with the same amount of risk, like especially the ones I've shown you today. But then you have also the situation of everything corrected significantly. We had a bear market for the SPX. Everything gets more optimal because of that. And then I obviously would size more on some of them if I really like them. True, but crypto is the easiest markets to enter, buy, sell, no regulations. Probably that's why a lot of people like alts. Yeah, sure. I understand. I understand, and it makes like also perfect sense. And it's very nice to trade with the crypto user interface and all that. But I still don't get why people prefer altcoins over BTC and ETH so much, because they're a lot more erratic. They're a lot more, I don't want to say random because it's the opposite. It's a lot more manipulative and it's a lot harder to read, like PR wise, market structure wise. And I said I don't see a big advantage most of the time. I said if it leads to better R, if it leads to you get confirmation from BTC first, you can then enter AVAX in this case, for example, while it's still being on a good R, because it's lagging behind. Yeah, this is like these are logical reasons, but for most people it's not logical as far as I can tell. Probably because most people still look for 100x and probably associate that with altcoins and not your alt stocks. Yeah, true. Um, this as well. So I mean, these are completely different markets, right? I understand that people that are in crypto, it's like like there is some kind of challenge to switch to another market. You need to open a new broker. You need to maybe even answer some questions and make a KYC and stuff like that. I get that, but as said, from altcoin to BTC perspective and all that, I still don't get why people still love altcoins so much. Because obviously this cycle, most people simply only got wrecked by altcoins. But it's still like if I share an altcoin setup, you see a lot more engagement, and there's no real logic behind it, in my view. Generally say longer it ranges, the better, and then it gets a channel lifter from that range. Exactly. Longer consolidation means whales had longer time to accumulate. And then if you have a stronger reaction, it means the whole demand led to a bigger reaction, led to whales buying more, buying aggressive from this area on. And yeah, all of that combined makes it makes it stronger. I have a question. So on stocks, you do not enter on refined levels, more in an area of demand, supply, and trend break. So strong demand, basically where significant moves started, continued. Yeah, exactly. That's exactly it. And then, as I said, put it into context. So if once I saw the SPX is breaking down, like making lower lows and stuff like that, I started to invalidate a lot of my stock setups, which were hitting demand and which were like according to my strategy. And I missed some, but I also dodged some. So in the end, probably I would have just zero summed throughout this time. But now that the SPX is changing trend again, and as I said, this is just a 1% move. It looks like okay, yeah, how much time do we have left? But it's about like the concept, like the narrative that gets created with going for that high, making this all-time high. Everybody's like, yeah, risk on, maybe crypto pumps also 20-30% or something. It's like the whole thing, like the whole big picture of what are people doing once those things happen. And for this, the SPX only needs to go up 1-2%, going for that all-time high, creating like the impression of this never-ending bull market again. And many of those alt stocks are going to have those exit pumps, in my view, at least to the 0.5. And as I said, that's the thesis, and everything else is then refinement, technicals, stuff like that. And yeah, the edges, demand supply, premium discount, trend break. Glad it helps. Enjoy the rest of your day, Aristo. I mean, we have like 10 minutes left, and I'm very happy if we ended on time today, because I'm pretty done, to be honest. So maybe we can save this for next time, because we until we have set up everything and talked about everything, it will probably already take 5 minutes or something. But you guys also can use the stage whenever you want. So I don't know if you can open your own stage, but we can do a group call kind of thing for you guys. So if you want to still keep talking and want to chart together, we can do all of that. It doesn't really matter. It's just for me because I want to go to bed at some point. But you guys can have your fun here. It's really no problem. That's what Discord is for. So yeah, if you want to, can simply, don't know with the stage, I'm not quite sure, but I can give you guys, we can make some kind of voice channel. So if this is a general wish, if you want to do that. And as I said, you can hang out there every day, every time, every time you want to discuss something. As this is what it's for, right? So um yeah, so what would you want to call it? Let's call it hangout area. And if you hangout area, and if I give you permissions, view channel. I give you guys even the permission to manage permissions. So if I fuck something up here, but it's speak, video, connect, should be everything fine. You can simply change it yourself um, in the hangout area, or whatever, whatever you want to call it. The white room. Yeah. And we have 10 minutes left, so I don't want to cut this session short or anything. But as said, I'm pretty cooked, especially like after talking 1.5 hours, my brain is fried. So We still have 10 minutes. No worries. Yeah, it's mentally it's demanding. It really is. Explaining and all this information, all this data, while being in those trades, right? I executed like 6 trades today, and I'm in this trade, talking about this trades, explaining these trades, talking English. By the way, it's also something. I mean, it's a second language for me, and I'm really happy how good it is by now. Because a year ago, I would probably not been able to do streams like that. But it's still mentally demanding. Not it's not coming out like my Bavarian. Nice, Rooney. Looks good. Looks good. I also saw Sui yesterday, and I thought of you. Great that you managed it so good. Okay, guys. Any more questions or something? Because I'm completely empty. I have said everything I wanted to say. So if that's it from your side, we're gonna wrap it up here. Okay, guys. Yeah, thank you too. I'm happy it was helpful. We're gonna talk next Saturday. As said, try the hangout area. And if there is a problem, let me know. I probably be like 5 minutes or something. You can still ask me. But as said, you guys have permission, so you can also change the settings. Don't change like any important settings. I don't know if this can fuck up the roles or something, but should be all right. Screen sharing, all that kind of stuff. So yeah, as always, have a great week. Thanks for joining in. Bye bye.